Twitter stock is down more than 4% today, more than 50% in the past 12 months. 4 high-profile execs are leaving. My guests are with me now. Lido Isle advisors Jason Rotman, A&G Capital President Hillary Kramer. Jason, is Twitter on death watch, or can Jack Dorsey pull off a miracle?
No, you know what? I think several years from now, notice how I say years, not months, several years from now, we're going to look back at this moment and say, wow, I wish I would have bought Twitter. So I think, Twitter's not going to double in price over the next quarter, but I think it's an incredible company. It's growing. It's a growing company. It just needs to start turning a profit. And what a lot of people don't talk about is it's got $3.5 billion of cash. So I think right now, if you're an owner of Twitter, stay long, and you could even consider buying more down here because it's a good long-term investment. So,
Hillary, to Jason's point, there are 300 million users worldwide for Twitter, but how do you make them pay for the service that Twitter offers? How do they monetize it?
Well, that's just it, Deirdre. The model is really broken, and it just can't be fixed. And finding ways to make money, like going into new areas like headphones, for example, it's just not going to cut it. The good news, though, for Twitter is I'm not really looking at it to die. I'm looking at Twitter as a stock that's going to jump up because Twitter will be acquired in the next few months, and these 4 exits of these executives, this is just the beginning of what is taking place as they clean house and get the slate ready for someone to come in. Maybe it's even Google, Deirdre.
Okay, I'm glad you said that. That was going to be my next question, so we're taking note of that, Hillary. I want to shift gears a little bit away from tech towards energy. Oil down another 7% today, so near $30 a barrel. Jason, how low can oil go?
Well, it's funny. Twitter, oil. I mean, what's the difference at this point? I mean, where's the bottom for both of these things? I think oil is under the category of lower for longer. I know people talked about interest rates using that phrase, lower for longer. Oil is clearly going to stay lower for a longer period of time. You have Saudi Arabia news that they're going to continue to max out their investments in oil production. That's why oil was up 9% Friday. It's down 7.5% today based off of that news alone. So I think picking bottoms in oil is very, very dangerous.
All right, so picking bottoms in oil, I hear you saying avoid that. But Hillary, I want to ask you about this connection between commodity prices and overall stock prices. Jason was going there anyway, but if you look at energy stocks today, I mean, they were the biggest drag, and oil and stocks are trading in the tightest pattern, the most similar pattern in more than 25 years. I assume that means most investors are betting on a global recession. Do you see it that way?
Well, what I do see are defaults and bankruptcies in the energy sector, and that's why right now the stock market and the price of oil, are so highly correlated. Ultimately, they'll bifurcate. That's the good news. That does eventually happen. Just like we in the U.S. stock market started trading on our own, separate from what was happening in China. We will see this, but it is going to be an incredible drag on economies around the world as the price of oil drops, because so much debt, so many bonds, trillions of dollars, probably, if you add it up around the world, were issued to start producing, to find oil, and we just have oversupply.
Hillary Kramer, thank you as always. Jason Rotman, thank you as always. Glad you are here.